Hello and welcome, I'm Suyash Maheshwari and you're watching Last Tick here on News 9, where we bring to you the lowdown of the day's action on the Lal Street. And Indian markets, they extended their winning run to 5 straight sessions on Thursday, the April FNO expiry for Nifty contracts. Nifty today opened gap down, hurt by RBI's crackdown on Kotak Mahindra Bank, which was responsible for half of Nifty's early morning losses. However, within the first hour of trading itself, the bulls they sprung back to action, pairing all the losses for the index and then building onto it. The buying interest although further picked up around that 1:30–1:45 p.m. When Nifty was finally able to break above the big hurdle placed at 22,500. I mean, if you remember on this show, on several occasions we have pointed out that 22,500 perhaps holds the key for the index, because this is a level from where we have reversed course multiple times in the past, and that's also where we made a record high back in January around that 22,500, 530 odd levels. So the market had to, the Nifty index had to break above it, and break above it with good volumes to really say that the market has, or is the direction of the market is on the bullish side. And that has pretty much what has happened. I mean, if you think about it, Nifty, after it was able to break past that 22,500 hurdle, we saw another 100–150 point rally from there on, which helped Nifty to get to its highest level since April 10. We got to 22,500. I mean, retraced some bit from there, but I think what makes a further case for the bulls here is that we were able to close above the 78.6% retracement level, which is placed at 22,562. We just closed right above it, and again, since the market they opened lower and most of the losses were on the back of correction in Nifty Bank, it's it was Nifty Bank that pretty much led the charge today. The pressure that we saw in the morning, it was also because of Nifty Bank, because of the correction in the 10% plus correction in Kotak Mahindra Bank. Nifty Bank opened about 1% lower, but then it went on to recover about 700 points and even took the Nifty along with it. Look at the distribution today. Axis, SBI, ICI alone, they were responsible for 40% of Nifty's gain on one side, and on the other side, the losses that came for Nifty in terms of the negative contributors. Kotak Mahindra is at the top of the list. It was responsible for 76% of that. So it was Nifty Bank that was driving all the action, and again we pointed that out as well, because Nifty Bank was at that make or break level of 48,000, and it was able to close above the 48,000 mark for after I think multiple sessions yesterday, and today also again a strong rebound in Nifty Bank, and we moved higher towards that 48,500 mark. Among other things that we track, the small cap and the mid cap index, I mean, tremendous recovery over there as well. The small cap index made a record high, its second day making a fresh record high. The mid cap index ended above 50,000 for the first time since April 12. So all in all, a very positive session, and because it was a the last trading session of the April series, it was pretty much a wild ride. Remember when we entered the April series, the market was in that recovery sort of a phase after that 1,000 point crash, which was on the back of regulator talking about froth in the building in the broader markets, the mid cap and the small cap space. From there on, Nifty again gave up about 1,000 points, and then we saw a recovery of about 700 points at least now. So Nifty in the April series, despite this wild choppiness, only ended with gains of about 1%. If you remember, in the morning we had also mentioned that Nifty was essentially flat for the April series. So most of these gains that came for Nifty today in the April series actually came only today with that one that 1% sort of a rise. So Nifty in the April series has given returns of about 1%. Nifty Bank has surged nearly 2.9%. The mid cap index has been the best performer. It has surged 4.5%. But again, the question really remains, because there are enough and more reasons for us to worry about. Where do we go from here on? Can we sustain at the higher levels? In my mind, 22,500 was the litmus test, but again, as I mentioned, there are enough global and domestic factors for us to keep an eye out on for. So for that, let's get an expert on board, and it's Mr. Amar Deo Singh of Angel One that joins us on Last Tick. Sir, thank you for giving us time on News 9. And I mean, very interesting series we just witnessed. April, I mean, what a choppy ride it was. Recovery, fall, recovery again. Essentially, we have ended just about 1% higher. But in my opinion, at least 22,500 was a big one, the big hurdle that we needed to take out. We have done that. We have closed about 70 points higher from it. Can we now perhaps, take out the record high plays at 22,775 odd levels and even move towards 23,000?
Yeah, very good evening, and thank you for having me on the show. I would say the rally that we witnessed in Nifty, despite the major correction in Kotak Mahindra Bank, which was down by almost 10%. I would say that this does give some solace, because if we go back to Nifty traded as low as 21,777, almost 21,800 levels, and currently it's around 22,560. So that's a more than 700 points rally from the lows, recent lows, and that also low was also not very far off. It was on 19th of April. Having said that, we should also remember that today being the monthly expiry also, so clearly that has definitely have had an impact on the markets, because a lot of shorts got squeezed off, because the correction which we had witnessed earlier post the Iran, I would say Israel attack on Iran, then the recovery has also been very sharp. And now the big question is that is this recovery going to last? That's a key question. If you look at the data, I would say data more or less on the mixed side. If you look at on the technical chart, so somewhere on the other, Nifty closing above the 22,500, that's definitely a positive sign. But I would say it's still too early to take that call that now the trend has reversed. Because if you ask me, the trend from a long-term perspective on the monthly chart, that continues to remain strong, and from no doubt about it. Intermediate term trend, if you ask me, that's more or less flattish. Short-term trend again is more or less flattish. So it clearly tells me that there's no trend in the market as of now. It's more of a range play based on certain triggers and certain, I would say, sentiments and the global sentiments at large. Having said that, if you look at India VIX, again, India VIX is trading very low around the 10, between the 10-11 mark. So that tells me that markets are not unduly perturbed over any, I would say, significant, I would say, negative situation arising. So that's what the markets or investors are factoring in. The other interesting part is, as you rightly said, small cap, the mid cap, they are trading firm. So that tells me that it's a broad-based rally. And also so the technical indicators which we've been looking at, which it basically gauges the market strength from a broad-based rally, wherein, say, for example, you'll find that more than 65% of the stocks are trading above their 200-day moving averages. The number of all-time high stocks which are trading, they exceed that strength, is still on a rise. The number of stocks which are trading at the 52-week highs, that trend is also up. So that tells me that overall the broad-based support for the market is still there. But yeah, cautious is investors, some category definitely are cautious at the current levels, given the volatility that we have witnessed over the last few trading sessions. So the level to watch out for is 22,600, 650 for Nifty in the short term. That's one level to watch out for. Sustaining of that level, then we could say that yeah, we are now seeing a chance of a trend change in a short-term perspective as well. Downside 22,300, that's going to be a short-term support for Nifty.
All right, 22,300 on the downside will act as a support. 22,600 is what we need to take out for a firm bullish view. Sir, please stay with us. It's time to take a short break. We have much more to discuss with you on the other side.
India produces between 1,500 and 2,000 films every year, the highest for any country. But they get ignored at international awards.
The Oscars are basically American national awards for themselves.
You're not going to be able to make a better pizza than an Italian chef. You're not going to be able to make better sushi than a Japanese chef. Will you make better khichdi than a Japanese chef? Right? So I want you to taste my food. We are making cinema that we are proud of.
In fact, it has been 2 decades since an Indian feature film featured in the Oscars International Film category.
All these years, for much of its history, they've been just awarding their own films, and this one tiny category, Best Foreign Language Film, had the entire world frothing at the mouth to get into the Oscars.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching Last Tick here on News 9, and Kotak Mahindra Bank has become the latest in the line of entities in financial services which have been pulled by the regulator for various lapses. RBI post market hours yesterday barred Kotak Mahindra Bank from onboarding new customers to its online and mobile banking channels, and also from issuing fresh credit cards. The stock, of course, took a massive beating today. It was down 11% in today's trade. I mean, Amar, I'll come to you. What's your assessment with the what's going on with Kotak Mahindra Bank? Do you think it's in line for multiple rating downgrades? What is your call on the stock? And also, will we see a sentimental crash, or is the worst over for now?
Yeah, I would say if we look at Kotak Mahindra Bank, again, this is one stock which really hasn't delivered returns if you look at many quarters, because in terms of investor returns, the stock hasn't really performed at all. Having said that, if you look at the charts from an intermediate term perspective, if we go back in time and see, so somewhere in March of 2023, the stock had made a low somewhere around the 1640 odd level. So somewhere around 1640 was a low, and then the stock rallied towards the 2000 mark. And then again, the stock recently today made a low of 1600 and 1602, and completes around 1644. So if you ask me, on the long-term charts, on the intermediate-term trend, there is no positive biasness towards this particular stock. But the low of today is something which is very important. 1600, that's going to be very important low for Kotak Mahindra Bank. If that low is taken, then we could witness some further correction in the stock, because that's a very strong support zone. Because if I go back in time and look at in September of 2022, the stock in that quarter, the stock had made a low of 1636. So 1600, 1650, that's a zone of major support zone for the stock. If that is taken out, then it could mean that the stock could witness further selling pressure. So one should rather wait out. As far as the trend is concerned, I wouldn't recommend the stock at the current levels, or maybe because there is no, I would say, positive biases in the charts as well.
All right, 1600 will be a big support for Kotak Mahindra Bank. That's a word coming in from Amar. Sir, we'll move on. The March quarter numbers of Nestle India are out, and the Maggi maker has surpassed expectations in both revenues and profit. Nestle India reported a standalone net profit of 934 crore for the quarter ended March 2024. This marks a 27% jump from 737 crore in the year ago period, and analysts had pegged the figure to be around that 850 crore in the quarter gone by. So big jump from expectations as well. The company's revenue during the January-March quarter rose 9.1% year on year, coming in at 5,268 crore from 4,830 crore in the corresponding quarter of the previous financial year. At the operating level, EBITDA, or earnings before interest, tax, depreciation and amortization, increased 21.8% to 1,337 crore from 1,019 crore, while EBITDA margin improved by 270 basis points to to 25.4% from 22.7%. The board of directors of Nestle India have also recommended a final dividend of rupees 8.5 per share. But remember, the company has recently come under the scanner after a study found that found unhealthy amounts of sugar in its baby products. Switzerland-based investigative agency Public Eye alleged that the company added 2.7 grams of sugar per serving to its baby food brand Cerelac. Nestle now has defended itself and said that it has reduced added sugar in its baby products in India by over 30% over the past 5 years. But again, it is facing probe from FSSAI. But Amar, I'll come to you. The numbers reported by Nestle India are good, but again the company has found itself in a bit of a soup amid this allegations of high sugar content in Cerelac. That said, the stock today surged about 2.5% after the numbers came out. Most of that spike came after the numbers came out as well, and it's back at the levels it was before this entire controversy. I mean, what's your take on Nestle India? Is it worth considering at current valuations, or would you recommend staying away till FSSAI probe is done?
I would say how much the value that probe will have, that time will tell. That investors would also look at how much that will have an impact, material impact on the company in terms of their sales and revenue. That's another aspect that needs to be looked at. But these are questions where no one has an answer as of today. Having said that, if you look at the charts, at the trend of the stock isn't really going anywhere. It did manage some good up move today. The stock was up almost 2.5 percentage points today. But if I look at the intermediate term trend, so 2600, 2650, or maybe you can say 2650, 2700, that's going to act as a very strong resistance for the stock. But on the downside also, the stock is very strongly supported on the 2400. So the stock is more of a range play between 2400 and 2700. So it's a very good from a trading range perspective. If you ask me from a long-term perspective, the long-term trend remains positive for the stock. Intermediate term trend, the stock isn't going anywhere. So clearly it tells me that it's more of a range play in the stock. On corrections, you can buy it towards, the closer you buy towards 2450 odd levels, the better off you are. Towards 2650, you can look at booking profits. That's it for the stock.
All right, Nestle India is potentially only a range play, but we also need to hear what the probe results are. Remember, there are speculations that Nestle India has added, actually Nestle, the international franchise, adds 2.7 grams of sugar per serving in its baby food brand Cerelac, and that has landed the company under the scanner, and especially for for the developing countries including India. So that is something that not only impacts the sentiment around the company and the stock, but also the brand image of the company. And as multiple other these food supplement brands have also come under the scanner for perhaps misrepresenting the amount of sugar that is in their supplements or their health drinks. But that is for Nestle. The numbers overall, again, they are good, but the stock has taken a beating. It's down on multiple time frames. But the spike, that the 2.5% spike that came for Nestle today was only after the results came out, and essentially we are where we were before this entire controversy broke out, which was just a few days ago. But again, as Mr. Amardev Singh said, that wait for the probe, what FSSAI has to say in its probe before taking a call on Nestle India. But it's time to take a short break. Amar, please stay with us. We have a lot to discuss with you, and this time in the primary market, sir.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching Last Tick here on News 9. And after years of speculation, Swiggy's shareholders have finally given the green light for an IPO. As per the regulatory filings with the Registrar of Companies, the Bengaluru-based company plans to raise up to 3,750 crore through a fresh issue and up to 6,664 crore from an offer for sale component. Now, Amar, coming to you, since we don't know the price band, we don't know, what sort of a valuation multiple the company is asking for. But considering the kind of tremendous run Zomato has been on in the, the last 12-15 months, it has essentially tripled investors' wealth in that time frame. Seems like the time is ripe for Swiggy to go public. Your thoughts, sir?
Yeah, I would say if you look at the overall market sentiments, which at a point of time were really, I would say, on the dampening side with regard to many of these new age companies and Baiju's also, the way the negative news that floated around the company, and also venture capital to a very great extent had dried down and many of the IPOs hadn't really performed. So now that seems to be more of a on the back burner right now. And the way, as you rightly put, we've seen some very stellar moves in Zomato, and Swiggy is also looking at it, that getting into the market, because when a company comes with an IPO, market conditions are also very important, because that really shows the investor interest level, which would be so. So currently the markets are definitely on a positive frame of mind. So I think that should definitely help. And given that the competition also in this category is showing signs of positive biasness for investors, and in terms of returns also have been there. So I think this is which many investors would look forward to. We'll have to see further, get into the finer details for further analysis.
All right. Another IPO that may hit the streets in the coming months is Tata Capital. As per reports, Tata Group may pursue listing of its NBFC arm to avoid the September 2025 listing deadline for Tata Sons. For the benefit of our viewers, let's jog back our memories a bit. Now remember, according to RBI's rules, Tata Sons is an upper layer NBFC, which is, because of which it is required to go public by September 2025. Now the company can potentially avoid listing if it classifies itself as a core investment company instead. For that, it needs to bring down the debt on its books from about 20,000 crore now to under about 100 crore rupees. Now last month, remember, Tata Sons sold 2.34 crore worth of shares of TCS in a block deal, which was said to be worth around 9,000 crore. So that perhaps takes care of about 45 to 50% of the debt problem. The other half could potentially come from Tata Capital's IPO, or at least part of it could come from that. But Amar, again coming to you, do you expect Tata Group stocks, where Tata Sons holding is high, to see some sort of a negative impact from this news? Because I mean, for instance, Tata Chemicals surged last month on the back of a potential listing of Tata Sons, which could lead to value unlocking. But looks like if Tata Capital IPO goes through, Tata Sons may after all be able to avoid listing, sir.
Yeah, that possibility is definitely there, and they would also be looking at how to go with the regulations which come in effect next year by September 2025. So if you look at Tata Capital, see what investors definitely look at from the Tata Group is that Tata Group has rewarded its investors significantly, be it in terms of TCS, in terms of Tata Motors, in terms of Tata Steel, and other, I would say, their group companies as well. So investors would definitely be looking at this opportunity as well, because if you look at Tata Capital, it it operates in a number of business sectors, and also and its subsidiaries, they offer a broad range of services in the financial services sector as well. So all in all, it could be of interest to investors at large, and Tata Group definitely commands a premium and investor loyalty to a certain extent, given the sort of returns and given the sort of corporate governance structure which this group operates into. So yeah, investors would look forward to it in terms of what exactly the structure is and what would be the pricing as well.
All right, and it looks like we are seeing some bit of an impact in the prices. Tata Chemicals, for instance, has fallen by about 1%, over 1%. In fact, Tata Tech is also down about 1.5%. Titan is another one which is down 1%. India Hotels is down 5%. There are other factors at play as well. But on the other side, TCS is in the positive. It's up 0.5%. Tata Steel is up about almost 1%. I mean, and you know, it's also on the back of this broader rally that is playing out in metal stocks. Tata Motors came back today. It fell below 1000 levels. I think it's back above it. It surged about 1.04%, and Tata Power again 1% sort of a rally. What will be the impact? I mean, we will see to it, and first for that, of course, we need to the news needs to be confirmed that Tata Capital is indeed going public. But with that, it's a wrap on this edition of Last Tick. Thank you for watching. We'll see you at 9:45 a.m. tomorrow on First Tick.
जानना है तो देखिए, समझना है